get to the asset class, I will address your inquiries. And today I'm going to talk about how to play the year-end rally. It may not seem like there's going to be a year-end rally today with the Dow down 270, with Palantir down 10%, but we have 2 months to go before the year-end rally has to materialize. Okay, so anyway, let's get the show on the road here. I'm broadcasting from Silicon Valley, California, and literally within 10 miles of where I live and work, we have Palantir, Apple, Netflix, Google, Palo Alto Networks. You know, I could spit and hit most of my top performing investments for the last 20 years. They're all right in this neighborhood. You'd be amazed what kind of stock tips you can pick up in a Starbucks around here. So this is the long-term view. I'm not going to waste any time. Markets are running up ahead of a hyper liquidity surge in 2026. The government will be doing everything it can to print money and make asset prices go up. What happens after that? Nobody cares. All we need is a good 2026 and everything is good. Successful interest rate cuts by the Fed, quantitative easing, and massive money printing will combine to drive all asset prices higher. Global economy is being fundamentally remade by artificial intelligence, and those companies in the forefront, like the Magnificent Seven, will deliver the best investment performance. I remember when computers first made it on the scene, and it is having a similar impact now. Never underestimate the earnings power of U.S. tech companies. Notice how well the big tech has led the last rally. Trade wars, inflation, recessions, politics, and exploding national debt are just temporary distractions. Ignore the noise and keep focused on the big picture. So take out your pen and paper to take notes, or start typing into your smartphone. What I'm about to tell you will blow you away and change your life. For I'm in the early retirement business, your early retirement. Learn what to buy, when to buy it, and why. And whenever I have free time, I pop over to England and fly this Spitfire Mark 9 fighter, which is from the Battle of Britain. So how would you like to trade for a living full time? Well, why listen to me? 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House under Ronald Reagan, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, 18 years now publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still working and still breathing, for that matter. And of course, the other reason to listen to me is our performance. We have averaged 50.97% for the last 18 years compared to 28.71% for the S&P 500. That is an outstanding return. And notice that while the S&P 500 has periodic huge drawdowns of 20%, or in this case, 50%, we don't. We go up, sideways, up, sideways, up, sideways. And that is the typical performance of a modern hedge fund. We also make money every month. This is our last 12 months of performance numbers. You can see we were up every month so far for the last 12 months. And for the previous year, we were up every month then. I think we haven't had a down month for 2.5 years. And even that was only slightly, like 0.3% or something. So far, year to date, we are up 57.75%, 811% since inception. This is the performance you want to die for. But don't take my word for it. Listen to one of our happy customers. Well, if I can get the screen up.
Hi, my name is Wilson, and I've been with Matt Hedge Fund Trader and John Thomas since 2019. I caught the phenomenal returns in 2019 and 2020, somewhere in the order of the 80–90% returns on both of those years. I caught all of those trades, NVIDIA, the TLT, the Teslas, and so many more. And then in 2021, I started trading in some additional accounts, and I have caught almost all of those trades as well, and have been getting almost the entire returns that John has received, and it's been just fantastic.
Well, thank you, Wilson. Always nice to get it from the real customer. How did Wilson do it? Well, he made 482% on NVIDIA, 811% on NVIDIA again, 421% on Berkshire Hathaway, 412% on JP Morgan, 394% on Palo Alto Networks, 350% on Vertex Pharmaceutical, 113% on silver, and again, 87% on JP Morgan. Of course, these returns are far higher than what the actual underlying stock prices did. And how do you do that? Well, listen on, we'll tell you exactly how you can do that. But Wilson did turn $1.2 million into $92.6 million in just 2 years. Of course, this is our secret weapon, the Mad Hedge Profit Predictor. That is my market timing index and my secret weapon. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. Took a team of mathematicians 1,000 hours of calculations to come up with this algorithm. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. This is 3 years of market timing index calls. You notice at market bottoms, we get lots of buys. At tops, we get lots of sells. Buy, sell, buy, sell. It's like having a money printing machine. I'm not the only one using algorithms. Some 80 to 90% of all current trading in the market is algorithm driven. I was walking by the Miami waterfront a few years ago and saw this super yacht, and look what it was called, Algorithm. Of course, this is the past 12 months of market timing index calls, and you can see right in the Liberation Day meltdown, we got extremely strong buy signals. After the rally there, we have a strong sell signals, got another buy down here, a sell up here, and we've been selling every rally ever since. So right now we're dead neutral, right in the middle of the range. So nothing to do, but if we dip back down again, I'll be a buyer once more. And again, we email this with updates to you several times a day. So why cover all asset classes? Sounds like a lot of work to me, which it is. Well, information about one asset class sheds light on all the others. For example, knowing what the bond market is going to do and therefore interest rates is incredibly useful advantage when picking stocks. Some asset classes will be doing great while others are dead in the water. It will point you to where to trade the winners and how to avoid the losers. Give yourself every advantage. Know what's happening all the time, everywhere. So what happens when this current euphoria wears off? Well, then you need to become a bear market expert and go to my short selling school. Of course, there are about a dozen ways you can play markets on the downside. I'll show you some of the easiest ones. Of course, the most well-known is the SDS, or the ultra short S&P 500. That is a 2x short S&P 500. And let's say the S&P 500 goes down 10%, the SDS goes up 20%. You can see it did exactly that in February when it nearly doubled after that 20% market correction. And if 2x short isn't enough for you, there's a 3x short out there, the SPXU. And again, that will deliver triple the inverse S&P 500. And again, in February, we got more than a double, about a 2.5 times on that. The greater the leverage, the greater the tracking error. That's something you have to keep in mind. So this is another way to protect your portfolios. Another good way is to sell short call options. You can either do this naked outright, which I often do in the case of Tesla after it's had a rally, or you can do this as a hedge against existing long positions in the underlying stock. In this particular case, we sold short the October 2025 470 calls for $38. I mean, that's almost 10%. And it collects $1,000 for each option as long as the stock stays below 470 at a 60% implied volatility. You can also buy volatility, otherwise known as the VIX. And in the spring, when we had that monster sell-off, the VIX went from 15 to 60. It was a 400% return. These peaks tend to only last for a day or two when the short sellers then pile in, shorting VIX. And of course, they were shorting VIX for 6 months after that, here, 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 and here. And that's how about half of the traders in Chicago on the exchanges make their living, is just shorting the VIX. You also can sell short IPOs. And of course, like everything these days, there is an ETF for that called, surprisingly, the Renaissance IPO ETF, or IPO. And when markets are going down, go back to February, the IPOs dropped twice as fast. And you can see this ETF dropped from 48 all the way down to 31 and then back up to 50. That's a monster return. You can play this on the long side in rising markets or on the short side in falling markets. Also, momentum collapses in falling markets. You can see in the spring meltdown, the MTUM, the ETF for this, collapsed from 230 all the way down to 170. So yet another way to protect your portfolio, short the MTUM. And of course, there are hedge funds that will offer protection. You just buy them in ETF form. And this one, the SPHB, bottomed in April and then rocketed to the upside, went from 60 to almost 110. That's almost a double. So that's another way to short this on the downside and then play it on the long side. And of course, there's always the hedge, which is a hedge fund you can buy through ETF format. And you can see during the February meltdown, this went from 15 up to 20, so about 35% return. And then it sold off once we bottomed and has been selling off ever since. So another good way to hedge your equity portfolios is to buy the HDGE. When all else fails, just buy 90-day T-bills. If you don't want to bother with all these fancy leverage ETFs or hedge fund type hedging vehicles, just buy 90-day treasury bills and you can get a risk-free 3.76%. They go all the way out to a year. You don't have to pay taxes until the bill matures. And this is how all major institutions keep their cash. That way, you don't have to worry about a broker going bankrupt. If your broker goes under, which does happen from time to time, I'm thinking Lehman Brothers and Bear Stearns, you can just order that your bonds be handed over to you and you don't get tied up in any bankruptcy proceedings. So, again, if you want to sleep at night, not have to worry about day to day volatility, this is the best way to do it. So, stocks are unwilling to wait. Investors are unwilling to wait for the government shutdown to end and are pushing stocks up to new highs. Airbnb ramped up their anti party software because these houses tended to get destroyed. Last year, Airbnb booked a staggering 491 million bookings. So I'd be buying this one on dips. By the way, I live in Airbnb myself about 6 months a year. Fed is going to overhaul the stress test. That is great news for financials, which have to pay hundreds of millions of years in legal fees and accounting fees just to satisfy the Fed with these tests. General Motors has gone ballistic. Turns out that car stocks are also interest sensitives because more than half of people who buy cars borrow the money to do so or they lease them and will benefit from lower interest rates. Ford also soared 13% for the same reason. Rivian, on the other hand, is announcing mass layoffs with the end of the $7,500 EV tax credit on September 30th. So all EV producers are undergoing a nuclear winter right now. I would avoid them, especially Tesla. Beyond Meat went up sevenfold in 1 week because it became a meme stock and had 109% short position. Believe me, it's not because people want to eat non-meat meat. Netflix bombed. Business was great, but they are at risk of losing a Brazilian tax case that took the stock down 15% in a week. So I'd be buying the dip down here on Netflix, hoping that the company hires better Brazilian tax attorneys. And of course, Apple surges to a new all-time high, topping a 4 trillion market cap. iPhone 17 is becoming one of the biggest selling consumer electronics products in history. So don't wait for the train or you'll get left behind at the station. So banks right now are my favorite sector because they're the biggest beneficiaries of deregulation, a mergers and acquisition boom, and falling interest rates. JP Morgan is the blue chip play here. We've already made a massive amount of money, up 50% from the April bottom, and we're targeting $400 a share for JP Morgan. And these blue boxes show the signals given by our market timing index. Got a very strong buy right here, as we did for practically all stocks. And that's our long-term target up there, $400 a share. Citibank, we're targeting 130. All the banks pretty much will do about the same. Berkshire Hathaway, a heavy bank owner, also the largest owner of Apple shares. I'm looking for $500 a share next year. And we have digested the retirement of Warren Buffett. That's what this $100 decline was all about right here. So getting back into the game now with the next generation, the market likes it. Goldman Sachs, one of the premier investment banks out there, it's already risen from almost doubled, really, from 400 to 750. We're targeting 800 next year. And Morgan Stanley, my alma mater, also a near double here. I'm looking for $200 a share next year for the same reasons as all of the above. BlackRock, money manager, has a hockey stick effect on earnings as assets rise, fees rise, and also more money pours in. So it's a great leverage play on a rising stock market. We're looking for $1,500 a share next year. And Interactive Brokers is the preeminent options market maker. And they are benefiting hugely from the huge surge in options trading volume. Believe it or not, 56% of all option trading now is in same day options. So that was a huge win for this company. I expect it to go to $100 a share next year. Second half of the barbell are technology plays, and we could spend the next several years rotating back and forth between tech plays and interest rate plays. That is your game. That is your rotation. So here's the main index, Compact, has risen from 15,000 to 21,000 this year, looking for 25,000 or up 20% next year again. It's all about the data, which is the new digital gold. Tesla, looking for a sell-off here because of the dead weight of the EV business. But eventually, in 10 years, when the robots and the robo-taxis come through, I expect a tenfold increase in Tesla to $4,600 a share. Yeah, that's a 10x, and that's what gets Elon Musk his trillion-dollar pay package. Microsoft sold off on earnings, which is becoming quite common, but is a major AI player and knows every keystroke you've made for the past 30 years. They keep all the data they ever get. They're like the government. They never throw anything away. By the way, these pictures on the right are all various World War II aircraft that I have flown in air shows around the country. That is my weekend hobby. Meta, disappointed on earnings, got a 15% sell off, looking to buy around this neighborhood. And they know every social media post you've made for the last 20 years. And that's me in front of a B-24 Liberator bomber from World War II, which looks like it was very heavily used up here in World War II. Amazon just announced blockbuster earnings, huge deal in AI, rocketed 10%. I'm looking for $300 a year, a share in 2026. And that is a B-26 Marauder, which was also used at the end of World War II. NVIDIA, of course, we all know and love. It's probably everybody's largest holding through capital appreciation alone. Targeting $250 a share if it doesn't reach it by the end of this year. I mean, the stock just keeps going ballistic all the time. Our original cost on this stock was $2. Yes, thank you very much, NVIDIA. Alphabet, also ballistic earnings, huge performance. We're looking for $300 a share next year, and that's me next to an early generation P-51 Mustang. Palo Alto Networks, hacking never goes out of style. They took over CyberArk to make them the biggest cyber security company in the world. Went ballistic on the earnings. I'm looking for $300 a share here. And that's it for stocks for now. Bonds are slowly grinding up, powered by Fed interest rate cuts, taking yields on the 10-year below 4.0%. There's no trade here. There's no volatility. It's been stuck in a 10-point range for a year, but the risk is very high. Debt crisis is postponed until 2026 when the government has to borrow or roll over $10 trillion worth of bonds. Still a big overhang on the trade from exploding national debt, declining U.S. credit quality, and collapsing U.S. dollar. U.S. yield curve is steepening. The only thing that can save the bond market is massive Fed buying through quantitative easing, which starts in 7 months. So avoid all the interest rate plays for now. That's going to be next year's game. So here is the TLT. I can see it double topped right at the 92 level and has since given up nearly half of that move. So stay away from bonds, no trade here. And there's the 10-year treasury yield, finally made it below 4.0%. Foreign currencies, we are getting a rare dollar rally right now. But over the long term, I'm looking for at least another 20% decline. Um, the dollar has recently had strength on a flight to safety bid caused by wars in the Middle East and oil sanctions against Russia. Government shutdown isn't helping either. It brought the sell America trade back into the market. Australian dollar tanks on China retaliations. Next dollar weakness will come with the evidence of more interest rate cuts, which we get on December 1st. So you want to buy all of the foreign currency plays here. And I'll go through them one by one. Australian dollar looks good for the long term. Japanese yen is moving sideways for now, but I expect another move up. Euro also trending up strongly. British pound, same kind of chart, looking for newer highs. Um, Energy and commodities, I'm staying away from. It keeps trying to uh, find a bottom only to fail and find a new one. Of course, the latest problem is the US imposing oil sanctions on Russia in attempt to cripple the Russian economy and get them to pull out of Ukraine. That brought oil up 5% in a day, which it very quickly gave back. Step comes at a time when global supply looks plentiful as nations inside and outside of the OPEC producer alliance ramp up output amid signs of cooling demand worldwide. If India does drastically cut purchases, senior refinery executives said the restrictions would make it all but impossible for oil flows to continue. The question will be whether China is willing to step into the void and buy the excess. Oil hit new lows of 58. After that, they got all the way down to 50. Russia needs to fund the war, and Saudi Arabia needs to fund a lavish lifestyle, so they need to produce more oil. And you can see right here, this is the Russian oil export terminal that was attacked a couple of weeks ago by a long range missile. This is why Ukraine's asking for more of them. About 25% of Russia's export capacity has been destroyed, and there are long gas lines in Russia. Couldn't happen to a nicer bunch of people. Here is the long range trend for oil, and I see it eventually going back to $10. That's where it was about 15 years ago when it traded at negative prices. It is gradually being replaced by alternatives and by nuclear and by increased efficiency of all oil using appliances, including cars. Comico, great play here in the energy. We've been in this for a couple of years. It's more than doubled. And of course, it got that 20% spike last week on news that the US is going to build 80 new nuclear power plants to power AI data centers. So, buy Comico, which is the largest uranium producer in the world based in Canada. Precious metals, we all had a fantastic run in gold. It was up 50% at one point, is now giving it back. I sold all of my gold and silver on the exact day that the prices peaked because it had gone hyperbolic and was just too risky. Don't rush back into gold just yet. The last time gold did this in the spring, it went sideways for 4 months. Precious metals related mining stocks retreating after a parabolic move over the past 2 months. Charts suggest that gold and gold miners are due for a more prolonged period of consolidation to reset their bullish long-term trends. First support on the charts in spot gold is $3,927 an ounce. Before that, we have 3,766, and we're close to that right now. Long term, the bullish trend in gold and silver is still on. and that's me in the Istanbul gold market doing some early Christmas shopping. Here are the support levels on the charts. You can see we're right at number one. Number two is just below. So again, this is your accumulation area right here. I expect it to hit 5,000 an ounce sometime next year. Of course, if you like gold, you'll like the gold miners even better. This is the GDX, and it has also had a major sell-off, about 20%. Barrick Gold, less of a, well, I'd say also about 20% on Barrick Gold, the world's largest gold miner. And Newmont Mining, also a major producer, 20% correction across the board. Silver, same thing, looking at about a 25% correction after we hit that Hunt Brothers 1979 high of $80 an ounce. Silver miners sold off big. Wheat and precious metals, major gold and silver royalty play, also sold off about $20. The harsh truth is you really need my help. Majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Notice that your broker will never issue a sell recommendation. That's because they don't want to get sued or scare off investment banking business. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated yourself. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why did dead people do so well? Because they never sell. And this is the last broker I had named Pinocchio, who I met in a souvenir shop in northern Italy a few years ago. You really need a pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great stocks and a lot of awful ones. You can earn a 10x return on the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 81.58% trailing 1 year return. That's what we've been delivering month in, month out. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. Greg turned $100,000 into $3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla power walls, and a Tesla Model 3. Still had enough money to send 3 kids to college. How did he make all that money? Trading Tesla. How about that? Bob turned $500,000 into $27 million in just 2 years. And let's hear from Bob. Mm-hmm. These videos are getting harder and harder with every presentation. Yeah. Let's try it again. Oh, we'll see. Doesn't want to play.
This is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. Hope you all do well trading yourselves. Thank you.
All right, Bob, thank you very much. So what do we do about all this? Well, stocks, you want to buy the dips, bonds buy dips, commodities buy dips, energy stand aside, too many better fish to fry, currencies buy tips, and precious metals buy dips. If you're not up 81.58% in the past 12 months, as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 50.97% average annualized return for 17 or 18 years now. You get those kind of returns, you get to do things that other people can't do, like take the owner's suite from New York to England on the Queen Mary 2, which, by the way, is 2 stories high and is 2,200 square feet and has a huge outside deck. Once you get to England, you can take the Orient Express to Venice, Italy. This is the very long view. Here's where the big money will be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade starting in 2023. And that's me watching climbers come down from the Matterhorn in Zermatt, Switzerland. What happened the last time we had an identical demographic setup as to today's? Well, the Dow went up 20 times in 18 years. Are you ready for a replay? Yes, you old timers out there will remember when the Dow went from 600 to 12,000. Well, what's it going to do this time? 20 times up from the 09 bottom gets you to 120,000 by 2030, except this time it's different. We are already 3/4 of the way there and just need less than a triple to get to that 120,000 target. Here is our 6,000 bottom in 2009, and here is our 2030 target right up here. Except this time it's different. Now we have AI as a tech turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. AI based products and services are just starting to roll out. The development of functional quantum computers means that computational ability is about to increase a trillion-fold at no cost. World's major computational challenges are about to be solved, like weather forecasting and cancer cures. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheap computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. And here is a picture of a quantum computer, which is basically a giant freezer because it has to operate at several hundred degrees below zero. So who will show you how to play the next 85,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my global trading dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 92.91% in a year. Follow my research and market beating trade alerts, and you will rake the profits in. Let a Marine Corps combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. No, that is not the plane I flew in Desert Storm. That is a 1932 de Havilland Tiger Moth, which I fly every time I stop by Cambridge, England. Notice the design flaws. Gas tank directly above your head and no brakes. You can only land this thing on grass fields. This is a typical trading history for us in 1 month. You can see we bought the S&P 500, made 16%, sold U.S. Treasuries for 8%, bought the Russell 2000 for 14%, bought Amazon for 12%, bought Apple for 7, lost 21% on Biogen. We stop out of our losers very quickly. And after that, you can see the rest of our trades were winners. It's just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt out, going up into the second half of 2025. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. This is how it works. Our algorithm predicted an upside breakout in NVIDIA way back in January 2024. So we sent out a buy signal right here. And what does the trade alert look like? Well, it looks like this. Buy NVIDIA at 480 or best. These are pre-split prices. It's an opening trade. There's the trade date. And to get $10,000 of exposure, you needed to buy 21 shares then. What happened after we sent this out? NVIDIA went up 45% in 22 trading days. Did we just sit around and pat ourselves on the back? No. We put out a sell alert, says, which looks like this. Take profits. Sell NVIDIA at 695 or best. Closing trade. This particular trade, we made $4,515 in 22 days on a $10,000 investment. This is a history of our 10 bankers, stocks that went up 10 times after we recommended them. Zoom went up 10 times. Lam Research went up 10.6 times. Square went up 25 times. Moderna went up 40 times. NVIDIA went up 100 times from our $2 cost. And Tesla went up 178 times from our $2.35 cost. Okay. Getting some questions here. Are these results independently certified and corroborated by professional accountant? Actually, they are, and we also send them to you every day. Every day we update our performance, and you can do your own accounting. Another question here, are T-bills a risk-free if the government defaults? Yes, if the U.S. government does default, I have a feeling that T-bills will be the last of your worries. You're going to be more worried about procuring food, water, and ammunition if it gets to that. Okay, and let's see, got that question. Okay. Okay, let's move on. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. With our Mad Hedge Global Trading Dispatch service, you get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars like this with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, and I'm just setting up lunches in Florida, in Orlando, Sarasota, and Miami, and then in South America, in Buenos Aires, Lima, and Cancun, Mexico. More educational videos and webinars than you can consume in a lifetime. Access to a 18-year database on investment ideas, searchable by names and ticker symbols. This is the one-stop shop. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living full-time, get the financial education of a lifetime. It's for small institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. With this service, you get our daily global market comments. This is in your inbox every day before the market opens, so you can act on it. You also get our Mad Hedge hot tips, 5 most important things that happened today and what to do about them. This is what I'm not going to charge you. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge $12,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as their investment 911. And I'm not going to charge you $3,500. That is the full price for this service on our website. Today, only through this webinar, creating this product cost me millions of dollars. The best customer service in the industry, running it costs millions more. Here's the offer you can't refuse, 6 months for just $997. That is a 71.5% discount to the website price. It's a limited time offer. We take only 25 new subscribers at a time, so we don't overwhelm the market with our trade alerts. It's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. You'll see there a blue link, madhedgefundtrader.com. That'll take you to the dedicated sales page, which is only available today. Let me make the money for you to pay for your own subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the link in the chat box on the right. Here's the offer you can't refuse, $997 for 6 months. Buy now and you will instantly receive a trade alert with an extremely high probability of success that you can execute immediately because the market is open right now, and make some of the most serious money in your life. Don't leave good money on the table. 90% of these trade alerts make money immediately. Just to give you a tease, I'll give you the chart for our trade alert that will be in your inbox in seconds. I'm just not going to tell you whether this is a buy or a sell. Let me do the heavy lifting for you. You have to go through 1,000 charts to find one this good. Sign up now. You'll also receive my free video course, Options Trading for Beginners, a 12-chapter course about everything you ever want to know about options, written for the basic beginner. So if you're going to work with me for 6 months, it's best to find out who is John Thomas. My family origins are very humble. I grew up the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood playing Little League baseball and becoming an Eagle Scout. There wasn't much to do in rural California in the old days, but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20, sold it at 30, and suddenly found a far better way to make money than delivering newspapers on a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions, where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. Ta-da, stock market. Of course, in those days, doing research meant carrying a 45 caliber Sten gun left over from World War II. And that's a very young John Thomas graduating from parachute school. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and I covered the rest of Asia all the way out to India. I figured out very quickly you didn't have to be that smart to make money in the stock market. So I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund. And that is my original ID card from Morgan Stanley. You can see the years have not been kind. And the guy who signed this card unfortunately died in the 9/11 attack. That's me losing the All Japan Karate Championships, and that's me at the Tokyo Stock Exchange. I served as a tank commander in Desert Storm in 1991. We lost one tank, and the Iraqis lost 5,000. As you see, I like winning. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to buy the latest hot car, fly your own private plane around Europe, go marlin fishing in Mexico, and collect vintage Rolls Royces. That's my entry in the Pebble Beach Car Show. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There is far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account and turn it into 500, that is more job satisfaction than I can get anywhere. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. You see an old plane flying loops over San Francisco or London these days, it's probably me. Now, my phone has been very active with new orders coming in. Let me take a quick look so I can thank the new subscribers. I see Frank from Columbus, Ohio. I have here Michael from Corpus Christi, Texas. Judy from Memphis, Tennessee. Seth from New York City. Jay from St. Petersburg, Florida. And another one came in. I have to go open another account. Okay. Let's go to that account. That account. Yeah, we've got a lot. Okay, so let me take a look at this. We have here Charles from Houston, Texas. Thank you very much, Charles. Check in your inbox. You should have the trade alert. Go ahead and execute it now. You can get a good price. And if you don't find it, look in your spam box. If you're a brand new subscriber, often that's where they end up. And we have another one from Boris from Nottingham, Florida. Didn't know they had a Nottingham in Florida. So thank you very much for your support. Look forward to working with you, and check your inbox for that alert. Okay. We have Eugene from Buffalo, New York. Okay, we're running out of time here, so let's see what we've got to do. Ultimate luxury, of course, is give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to Wounded Warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. Peter eventually built his fleet up to 16 flying aircraft, which today are worth about $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed to brisk 250 miles per hour, and the plane can do 500. The Spitfire outmaneuvered any plane the German Air Force threw up against it. This particular plane is credited with shooting down a Messerschmitt Bf 109, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover between two big, fluffy cumulus clouds and commenced a full on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed the 1G limitation, or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make the millions of dollars for you as I've done for thousands of other followers over the last 18 years. I look forward to working with all of you. All right, 6 months for just $997. And that is it for today. Any more questions? Okay, let me take a look. David, have you got any more questions at your end? And thanks for putting up the link to the sales page. You can see right now it's been very active. A few more buyers have come in. Lance from Bemidji, Minnesota. Ian from Cambridge, England. And we have Adam from Durham, South Carolina. And
I think
that wasn't a Nottingham in Florida. That was a Nottingham in England. I just got corrected here.
I think you probably answered this, but someone asked how many trades per week or per year average?
It depends totally on the market. When the market's dead, we don't trade. When there's no trade, we don't trade. We tend to be most active at market bottoms when we're buying like crazy. And we tend to do a lot of selling at market tops when we're unloading everything we have. So totally market driven, but the average is around 200 trade alerts a year, or on average about one a day.